Guys, we need to talk about something very urgent. Kevin Warsh is about to become Fed chair mid-May, and he might engage in something called financial depression. And what is this is that, like, you know, the United States, the government debt is almost $40 trillion. At the moment, it's around $38 trillion, as you can see here on the chart, $38 trillion government debt. And the interest that the United States is paying on this debt is absolutely huge. It's like you imagine that you have like huge credit card debt and you are just getting more credit card debt to pay your own credit cards. It just doesn't work. It's not sustainable. So Donald Trump needs to do something. So he elected Kevin Warsh to be the Fed chair, and he might do something called this financial repression. And this is what financial repression is. It's basically, it's going to create inflation on purpose to inflate away the debt. And how do they do this? They will decrease the Fed funds rate, the Federal Reserve funds rate, and basically force inflation to go up. Who loses with this is basically people that have cash. If you have cash, this cash will inflate away also. If you have just a salary and you are not investing, your salary will start buying less and less every month. That's why it's so important to invest. Really, cash is a melting ice cream. You need to convert it into something that it doesn't melt. And when I say something that doesn't melt, I'm usually talking about stocks and index ETFs, because when there is inflation, it's not only the price of food and cars that go up, the price of investable assets also go up. Price of stocks will go up, price of assets like gold. That's why gold over the last couple of years has been going up so much, because people anticipate this inflation. And let's now look at this chart. So every time you have this green line, which is the Fed funds rate, lower than inflation, it means that if you put your money in a bank, you are receiving from the bank less than what you are losing for inflation. For example, from this period, from 2009 up to 2015 or 2017, inflation was what? Well, inflation was around, it was quite low, 1.5 or so, but bank deposits were probably paying 0 or 0.5. So even if you put your money in the bank, you are losing money. There were other periods, for example, 2019, where inflation was like 1.5% and the Fed funds rate was 2.5%. So if you put your money in the bank, you gain a little bit. Very miserable 1% or so, but you gain a little bit compared to inflation. Now, what we see here is that at the moment, with the current levels of inflation, if you put your money in the bank deposit, and receive interest from the bank, you might be receiving now at the moment 3.5%. Well, the inflation might still be lower than that, but that's going to flip. In fact, the last quarter inflation, I think it was like 4 point something%, so it might be already flipped. So what's going to happen is that interest rates will go lower, so don't leave your money in the bank because it's not worth it. And more people will think like this and will invest. I was also checking money market funds is now like all-time high in terms of cash. These will flip. People in the institutions, instead of putting their money in money market funds, they will put their money into more risk-on assets, which is like stocks and ETFs, index ETFs and so on. So really, the move here, it needs to be investing in stuff. Okay, let me show you here this chart. Also, very, very important. This is an indicator that I created myself on TradingView. It's for free. You can have access to it. And you see here basically the debt to GDP per country, okay? And the biggest one in terms of debt is Japan. Everyone knows, huge debt in terms of government debt and also private debt. And then you have France, Canada, and in fourth place among the biggest companies, of course, you have US. In the US at the moment, the debt to GDP, government debt to GDP is 120%, private debt is 142%, and as you can see, is accelerating a lot. The velocity of the debt is increasing by a lot. Most countries are increasing their debt compared to their GDP, and this is unsustainable, and that's why they need to force inflation, okay? And again, if you are holding cash, you basically devalue your cash. You just lose money. If you are holding assets, that's why the rich get richer. It's because they hold investable assets. The rich get richer because every time there is inflation, they get their assets going up and up, stocks and etc. And the poor get poorer because they are not investing, they holding cash and or waiting for a salary, right? So you need to think like, what are the richest people doing? And you need to invest. It's a need. You need to buy and hold. You need to be a long-term investor. Of course, there are other countries that surprisingly are reducing their debt, which is, for example, the example of UK, Australia, and Saudi Arabia. I guess Saudi Arabia at the moment, they have a ton of cash because, oil prices are going up. They're exporting a lot of oil. They must be very happy with this cash that is entering their country. But really, you need to think like a long-term investor, and in any period over the last 100 years, 150 years, or even if you go back to ancient Rome, right? The Roman Empire fell because their currency they devalued the currency, right? There was a point over 2,000 years ago where in the Roman Empire, the currency was gold. Then they start to devalue the gold, start to mix it with other metals. People lose trust in their currency. And from there, the empire starts imploding. Also, because they increase a lot of the taxes, very high taxes, and people are like, I prefer not to work. It's like taxes were so high, and that made the empire to collapse. But anyway, going back to our investments here, what I want to say is that, yes, in my community, I share almost every week a new trade alert. We have been performing extremely well. Hit rate, win rate of 80% on average. Our stocks go up like 40% each trade. But anyway, the point here is that you need to invest. I've been making videos on how to invest. You need to have exposure to tech because tech is not going anywhere, okay? And these tech companies are really having real earnings, okay? You need to invest. And really, if you are not a stock picker, okay, you don't have time to find stocks, that's fine. Invest. You can always invest in index ETFs, okay? S&P 500 index ETFs, such as the VOO, or NASDAQ 100 ETFs, such as the QQQ. There are many other ETFs. Of course, this is not financial advice. I'm just sharing my personal experience. I've been investing for 20 years, okay, and I have a little bit of experience. This is what have worked for me. And when I talk about these stocks and ETFs that I talk about, I'm always having in mind the time in the market, not timing the market, okay? Because you look at the most successful investors in the world, the richest investors in the world, they are all buy and hold investors, okay? Warren Buffett's average holding period is like 15 years, okay? And he is the OG, one of the richest people in the world, right? So, and I'm pretty sure you cannot say from top of your mind like 5 or 10 richest people that are day traders. It doesn't exist, okay? Anyway, guys, if you want to learn more, I share everything I know in my Henrique Wealth Academy. Link in the description. And in the meantime, you can still have access to all my content here on YouTube. Give it a like and subscribe so that you don't miss the next video. I'll see you soon.